Baird, how you doing, man?
I'm good. Happy to be here. It's always nice to take a break from work and chat entrepreneurship.
Yeah, and you got your fingers in quite a few different ventures as usual, from what I've gathered from some of the other things as I was poking around and some of the things you've been doing. And
Yeah, I should probably, in hindsight, maybe after my last exit, should have taken some time off, but it was just on to the next thing and just keeping at it.
yeah, and the question is, what do you do if you take the time off, right? You were just talking about golfing. You can only golf so many rounds, right?
Yep. No, that's totally true. Yeah.
Well, I want to take us back for like how you jumped into entrepreneurship, but like before even that, I was telling you right before we hit record that we use your product. My marketing team does.
Awesome.
As Craig from Castos is kicking out the audiograms, and then I'm like, what do we do with these things? And lo and behold, my team on your product, and I got the email that you had sold, and I was like, well, that's just too fitting because that's what this show's about.
Awesome.
So it come full circle. So why don't you just take us back, man? Like, when did you become an entrepreneur? You got your hands in quite a few ventures. So maybe just kind of give us how did you get started into this space? And then what are you up to these days?
It's funny. My first dabbling in entrepreneurship is I created a website for people with GoPros that wanted to post their GoPro footage for their local communities. It was just charlestongopro.com. And I posted like 4 or 5 GoPro videos and then lost track of the project. I was like 23 at the time and just did it for fun. And somebody emailed me and was like, hey, I want to buy your website for $500. And we met at Starbucks. He gave me $500 cash. I gave him the login to the Squarespace and went home. I was living with my sister at the time, and we went to dinner that night, spent all $500 of it. But it was just this weird moment where it's like, whoa, you can just make money on the internet. You can just create things on the internet and people will pay you for it. It's just kind of this
ding, ding, ding.
Yeah. Just a really small little thing that started tugging at me over and over again. So I was working for a startup here in Charleston as a sales engineer, helping sell big data integration systems. It's a great business, but
like ERP systems or something like that.
We actually sold just the integration piece for CRMs. So we would move data from one source into CRMs. Cool. It's really niche business, bootstrap business too, which was actually really great to work for one of those as we were growing. But I just always had this nudge, and I think at the time I didn't know why I wanted to start my own thing. Looking back, I've always been searching for a creative outlet, and I've never been able to find it until entrepreneurship. I love being able. I didn't know this at the time. I was just following my gut instinct. But looking back, I just had this desire to create things, and I'm not good with my hands. I'm not artistic, but I have been able to find this creative outlet in building businesses and products and trying to sell them to the market.
How fun, man. And so what was outside of the $500 domain for cash and a dinner, where did it lead you? What was the first venture that got you started?
So the first venture was I was on the sales road all the time listening to, I'm a huge sports fan. I listen to sports radio nonstop. And I was always frustrated with the people that called in. It was always poor quality. The people that actually would pick up the phone and dial into a radio station, just it's not great content. And I always felt like there was this big missing opportunity for listeners of sports shows to be able to submit audio and listen to each other's comments and basically talk sports. I convinced one of my friends to help me build the mobile app. And we built this audio-based, what now is like Clubhouse and Twitter Spaces. We tried to do that 5 years ago just for sports. There's actually one called Locker now. So we were way too early. The tech wasn't ready. The audio market, podcasts were really still kind of in 2015 starting to like really ramp up. So 100%. We were way too early, but we spent almost 2 years working on that business, and we had a lot of fun, but we just made all the mistakes. We built first without talking to people. We didn't have a business plan. We had no idea how we would generate revenue, even if we could start getting these, a lot of people using it. We tried to then, like at the last minute, take it to the radio industry and sell it. And that was just total mistake of misreading, that industry. So the whole thing was, quote unquote, a failure. Obviously, we learned a lot from it, but it didn't really take off like we thought it would. But the beauty of that failure was that we built this little tool that took audio clips from our users and allowed it basically took those audio clips and created a video for Facebook and Twitter and Instagram. And we use that internally as a marketing tool. So when we were spinning that company down, we were using that as like this last ditch marketing tactic. And podcasters started emailing us or tweeting us and saying like, I don't understand your app, but how'd you do that? How'd you take audio? And it was just light bulb moment. Like, oh my gosh, we have been like pushing this idea of mine up the hill like a boulder, as opposed to
radio, to like old school radio too. Of all things, right?
Yeah, which man, just terrible industry to choose, especially
yellow pages and radio. I'll go like right.
Exactly. So this light bulb went off. We're like, man, we're doing this all wrong. We're like trying to take this idea that we think is amazing, as opposed to listening to customers in the market and hearing what they think and trying to follow them. So we just kind of threw out this audio marketing tool to podcasters, and it was hard. It was definitely hard getting those first 10, 50 customers. But then it was just, we felt the pull. Like, it's hard to explain that if you haven't felt that pull in your business before, but people were just, they would come to our website and just ask like, how do I do this? How can I make this better? I want to do X, Y, or Z to my video. And just, you could just feel it. And so we just kept working on it. And that's what turned into Wavve, which is the product you were talking about earlier, which is used by 200,000 podcasters. It grew to, we grew it to about like 1.5 million ARR and sold it earlier this year. So that was like our first, kind of first hit, I would say. And when I say we, I've got a few partners that I work with that are mostly technical, and I do all the sales, marketing, and all the kind of front house stuff.
That's awesome, man. And I appreciate the context. And and we're going to unpack that too, because as I was poking around on some of the things that you've been doing, you wrote on Turnkey a pretty cool article about what you'd learned. And so I want to peel that apart. But before we do, just kind of for the timeline. So as you were spinning down this, the first one, did you guys just jump right into Wavve? And like, you just kind of just like transferred your energy into that? Or like, how did that transition?
We were out of money and out of savings. So we were actually shutting that business down. And then we went and got contracting gigs, but that left us, they weren't full time. So it left us like 10, 15 hours a week, 20 hours a week to work on this on the side. So it was very much like, go pay the bills. And then with extra time, let's keep working on it, keep selling it and pushing it. And the goal with Wavve, to be honest, was we were hoping that one day it could pay our mortgages, and just be this passive income tool on the side that would, pay Nick and I's mortgage, which sounded amazing. And we just kept working on it. And every month we'd see 5-10% month over month growth. And it just kind of kept up and to the right. And it took a long time. I mean, it took us almost 2 years to hit 10K revenue, 10K MRR. So, that's kind of a grind looking back, but
kind of, man. I can relate. I've been there. You got, okay, we're going to do some consulting over here. We're kind of chasing our dream over there. We got, the family's got to make sure that the money's coming in to pay the bills.
Yeah. My wife likes to joke that she's our angel investor, because she was kind of keeping the finances together with her job while I was going off doing this stuff.
Also with emotional capital, right?
Yep. That too. Maybe more importantly.
So, what I found, I was listening to one of your interviews. It was on a YouTube channel. I can't remember the gentleman's podcast, but on the Turnkey pod, or on the blog, you were very articulate with what you learned, man. Like I was very shocked, and very surprised, because you explained like why and how things worked. And when you're talking about, throwing a couple grand into a company and scaling a software company, what I find interesting, Baird, is that so many people raise money, right? They go and they dilute their company, and, they go just that there's more attentions, put towards, seed round, A round, B round, all that kind of stuff these days. So just give me your mindset, man. Like when you started that and you got your co-founder and you're trying to pay your bills and stuff like that, and you're liking the creative juices, what was going through your head, and yeah, man, just super curious.
It was very much in the moment. We weren't thinking about raising money because we couldn't. There was, it was a $12 subscription cost. podcasting really hadn't matured from like
Mm.
investors weren't really putting money into the podcast market at that point. And we also didn't really have much of a business case at that point to raise money. So we just kind of, we set that goal of having it pay our mortgages and then kept consulting and working on the side and just pushing it and pushing it. I found like across all my projects, it's very much like not when I'm focused on outcomes, it's usually my ego getting in the way. And that usually throws me off course. When I'm working on something because I like it and I think it has opportunity and I think it's fun and creative, that usually results in much better outcomes for me. And that was very much at the time. We had customers coming in, we had a lot of people talking to us, and there was motion, and we were just kind of, following what was in front of us rather than sitting down and, articulating some incredible business plan that we were going to scale and grow. It was just very much kind of just following the pull, I guess is the best way to put it.
No, I'm following you, and I'm curious. Like, when you say if you're focused on the outcome, your ego gets in the way. Why do you think that?
That's always been whenever I get off track in entrepreneurship. For me personally, this has taken a lot of introspective thought, and when I've gone through anxiety periods to like step back and look back, it's always been around trying to fit some model of success that I think other people have. Like selling the business was definitely one of them. Like I felt like that was some badge I had to get, from an entrepreneurial standpoint. And looking back, nobody really cares. It was like a blog post that kind of got around for a little bit, but I've definitely found that like I need to be focused on why I do something. And for me, it's creativity. I like building new things, and I love it when people use them. And the pinnacle for me is when somebody uses my product, pays for it, and then tells somebody else about it. Like that is that's when I really feel valued as a creator. So when I'm doing that and just kind of chasing my interest and my curiosity, things go so much smoother. Whenever I'm, doing the opposite of that and just worrying about like, oh, I need to hit this milestone or this outcome, that's usually when I'm getting off track. I'm focusing on the wrong things and it slows me down. So it's just, I always just have to keep myself in check and make sure I'm doing things for the right reasons.
Yeah, man. The name of the show is called Intentional Growth, right? And it's
good. I hope I wouldn't get too deep there.
No. Oh my gosh, man. I have had more people on the show talking about mindset and all this stuff because so we actually created this, our business that has spun out of, so the podcast and all the material I've learned is these 5 principles. The first one is your drivers. What do you want from your business and why? Like, where do you want to live? Because, to your point, and I don't know if when you say focus on outcomes, it's a lot of people focus too much on the money. We're like, I believe that entrepreneurship, man, and I'm curious, like, as you're talking about your other gigs, is like, I believe that running businesses, you can literally create wealth and design your ideal life at the same time. But most people are like bifurcating them and saying, oh, I'm either going to be a broke artist or some, super wealthy VC firm that, VC that has no life and, sold your soul. And I just don't believe that you have to have one or the other.
Yeah, I agree. And one of the things that I think a lot of people, new entrepreneurs, the mistake they make is they don't do a good job matching their personalities to the business. Like, personality profiling, has a lot of value. And I don't think it's an end all be all, but I think there's so many different types of entrepreneurship that cater to different types of people. Like I would be the worst franchise operator in the history of the world, following detail, operations that somebody gives me, even if it had this massive $1 million opportunity to run a franchise, I'd be the worst at it. It's the same thing. Like not everybody should be like creating software from scratch. You might be better at services. You might be better at consulting, whatever it may be. So I think that's another thing that, you really want to get your why, like what you want to do and why, and then make sure it matches who you are, because running a VC backed software company takes a very specific set of, personality traits, in my opinion,
100%.
Compared to somebody like me. Like we lucked out that we tried to do the VC route on the first company. The second company, we couldn't raise money, so we wound up bootstrapping it. And looking back, I didn't know at the time, but bootstrapping just fits my personality so much more. It allows me to have freedom to, try different things, go in different directions. And, there's much less pressure because I get to set what the actual goals and expectations are, which I'd rather do that and make less money than make a ton of money and having to like, constantly hit all these different check boxes along the way. But some people thrive in that, great salespeople like thrive in that situation. So I think it's just, you really have to examine who you are and what you want. A lot of internal thought and processing as you go along, which is really hard to do. It's a lot easier to just kind of, follow what everybody, whatever the hot topic is of the day and just go do it.
I mean, honestly, man, couldn't agree more. If you went to our website, it's like, who are you? What do you want from your business and why? It's awesome. So like, how did you figure this out though? Right. Cause like, there's been people on my show that are in their 60s, big companies, sold, then depressed because they didn't figure this out. And you're at a fairly young age figuring this out. Like, how did you figure it out? And then how did you determine when you're off track?
Failure is one of the best ways to figure out what you don't like and what is not a good fit for you, because that's usually why it fails. Of course, luck's a big, sometimes things fail just because you're unlucky, of course. But, you hear that term all the time in startups, like, oh, go fail fast. Like, well, what's the point of failing fast? And the whole point of that is to learn. And so if you can learn what doesn't work and what is not a good fit for you, that's going to help you. It's easier to like cross things off the list than try to pick the most optimal outcome. So, I mean, that was for us. I mean, I spent 2 years trying to raise VC money and run a, B2C company. Like I spent a long time trying to do it. And it took 2 years for me to realize like, oh, this is not a good fit for me. And that's why it wasn't working. Cause I wasn't the person to build that business. Yeah. Somebody else was, and they went on and did it. Somebody has gone and done that. So, failure. And then, I can be hard headed sometimes. So it does take, I've been in situations where, it has taken me months to like realize. For me personally, it's always been when anxiety comes in with the business. That's when usually I've let something get off track and I've started focusing on the wrong things. And so when I'm now just this year starting to realize, like, if I'm feeling super anxious about a business, that's because something is kind of, something's off. And
how do you course correct when you're feeling that? Cause I think, and the reason the question, Baird, is that I think a lot of entrepreneurs think that, oh, that's just part of the gig. And I think that doesn't have to be that way.
Yeah. That's a good question. I've been really lucky to have good partners that I can go to and say, hey guys, like, something's not working here. Can we adjust? Like, do we need to pivot? Do we need to try something different? Should we shut this down? Is it time to quit? So I guess there's no great answer for that, but being able to lean on either peers or mentors that you have to help you work through these things and figure out where you are, where's the business, where's it going, should it even continue forward, things like that. For me, I always have to have collaboration to work through those thoughts and talk through stuff. But yeah, that's me personally. So that's a good question. I should spend more time thinking about like course correcting strategies because it's really important.
Yeah, like, I mean, and I think there's a couple of different types of courses that are happening in parallel. One is like because we talk a lot about in our show now, but also like there's your job, which is your role in the business, and then you're creating this financial asset, and you don't have to work in your financial asset if you actually separate the two, so you can kind of course correct in two different lanes. And most people don't think about it like that, and it's just interesting, like, what people do to go, okay, something's off now, like how are we going to deal with it? And like what I gathered from what you just said, just like listening to yourself going, not having very much fun right now. What are we going to do about it?
Yep. Yeah.
So what is the creative, as you're building Wavve, and because did you have all these other companies going on at the same time? Because you keep talking about the creative.
Yeah. So we created Wavve in that was 2016. So far, every business has taken about 2 years to get up and going. So Wavve took 2 years to kind of get rolling. And then we kept having users asking us to add captions to the social videos that we were creating, because captions are really important for attention span on social. And every time we spec'd it out, it was a huge project. So we decided, well, maybe this video captioning tool can live on its own and then integrate and power Wavve. So we did that and launched Subtitle in 2018, which has now turned into, has been interesting that we were just doing video captioning with Subtitle, and now it's turned into a full social video editing tool to help people get their videos ready for social media success. So we're still running Subtitle. It's growing, it's doing really well. And then as we were running those two businesses, very high volume, low average revenue per user, freemium style businesses, churn was just always a huge problem for us. And we spent a whole year just focused on churn for both companies. And one of our biggest successes was optimizing our cancellation flow. So this was kind of solving our own problem, trying to save customers as they were canceling. And it worked so well that we then pulled that out and turned that into Turnkey, which is what we're also, we launched that earlier this year, January of this year, we launched it. And this is
right
our
in the
first
middle of your sale. Like, why not? Right.
Dude, it was crazy. Yeah. It was, we did 3 months of due diligence while we were launching a new company. It was too much.
Before we go into the process that you guys went through, but so why didn't you guys, I mean, first of all, I love the fact that you're like listening to your own problems and the customer's problems, but then, so I want to hear about how you did that. But before we get into that, why didn't you keep them all into one company and keep piling the profits in to build one big company?
We get that question a lot. It would have been nice if we could have designed that as a master plan. But again, kind of going back to like, we were just always in the moment, and it made sense. At that time, the reason Subtitle was separate is because we had some partners that weren't ready to take on risk to really spend a whole year building that new business out. So we had to create two different entities there and then just integrate the two. And actually, really, that's kind of been the main reason, is just, one partner has a kid and, wants to take some time to relax while we're starting. If we're starting a new company every 2 years, it's not always a perfect timing for everybody. So that's why we've kind of split them out. And honestly, I think it's worked really well that way, because every company, the incentives are really strong for the people that had the ability to take risks at that moment. They have skin in the game. They see the opportunity. If it was one big company and we were like shifting people around, my concern is that, people might not have the same kind of vigor, since, the incentives might not be perfectly aligned. So it's worked out pretty well. It would be nice if we could kind of have this kind of venture studio type approach and kind of do it all under one house, but we're just kind of going with the flow.
No, I think I think it is a common situation, Baird, because like, especially more like if you're not raising money and you're more in the startup phase, you truly you either have to get funding to pay people's salaries, or you have to have the founders who are also doing the work. And I think that is the one caveat, like for the listeners that they hear me say the ownership versus, management role a lot. But like when you're in the more of the startup, you either have to get funding to pay for people's salaries, or the people have to do the work through sweat equity. And it does become very challenging to get that done. So then going back to my other question is, understanding what to launch. Like, are you the visionary? Are you listening to the customers? Are you listening to your own problems? I mean, how are you identifying where these opportunities are?
Yeah, that's generally been my job, is either evaluating the market and looking for patterns is kind of my general approach. Both of the first two companies, we served creators. And even though we weren't creators, we didn't have a podcast, we didn't create videos, it was still really easy to go on social media and see how people were using it, what people were asking for. You can search for things and look in comments. So that was the first way for those first two businesses. It was very much like, let's go see what's happening in the market. Let's create some little things and, see what the feedback is, and then listen to those customers and, allow them to help build the product. That was really the biggest change for me in entrepreneurship. Was the first 2 years, it was all about my idea. How can I make my idea better? The shift was, how can we give this little idea to customers and let them turn it into something that it needs to be, as opposed to, and then it takes all the pressure off me too. It's more about like, I'm just taking a little tiny idea and putting it out to the market, and let's see what it becomes. So that's very much been our process. Now with Turnkey has been a little different, because we solved our own problem first. And then we built the product because we had to build it for ourselves anyway. And then we're now taking this product to a market that wasn't really asking for it. So it has been a different learning experience of how do you educate a market that's not asking for something, but really needs it. So
what's the difference, the experience you've had with educating a market versus listening to the market?
I mean,
in what ways?
Well, the first thing is, running an inbound business, which Wavve and Subtitle were fully inbound. There was no, aside from paid ads, everything was, put out content, have users putting out content, user generated content, and just have as much content out as we can. And then, it's a funnel, inbound funnel to the product. Turnkey is almost the opposite, where we need to, people aren't they're not out there asking for this product, but they really need it. Most founders aren't waking up like the first thing they would say in the morning is not, oh my gosh, I want to fix my voluntary churn. Like that's what I'm going to focus on today. They're thinking about hiring, growth, all these other things. So, educating the market first has to be, it's less content and it's more thought leadership. Both of them are content, but it's less like volume play and it's more very well written, thought leadership pieces that are explaining why somebody should be doing something. So we've gone from, a bunch of demand out there saying, hey, come use this product and try it out, to basically convincing people that they need to do something different.
Yeah, you have a problem and this exists.
Yep. And also direct sales is probably is the biggest difference, that, when you have a market where there's a product where there's not existing demand out there, generally you need direct sales to go get it. So that has been a big shift for me, that realizing like, oh, I need to go get this business and I need to be on LinkedIn, hitting people up directly and, setting up meetings, setting up demos. So it's much more, I would say also the thing about B2B that I'm finding compared to the previous businesses is much more relational. People are really, it's the best customers we've gotten have been through referrals, less word of mouth, but like somebody that I've actually talked to and have spent time with and have, traded value with. It seems like in B2B, you need to build up kind of, social equity almost. I don't know what the right term is, but
that is exactly what the right term is. Yeah.
Yeah.
I mean, and trust and making sure that people understand you're not going to do the bait and switch. And
exactly. Yeah. So that's been really different too, because the other, the businesses before, they're just volume plays. I need 1,000 people on my landing page, and I know I'm going to get about 2% of them to convert, from free to paid. So
it's super interesting topic that I like, because I've personally experienced this too, Baird. And like, so first of all, the pricing, and I don't know if you've done this with your pricing, because understanding how to price the cost of client acquisition with direct sales and like what you're talking about versus I'm going to have a bunch of people in the Philippines crank out content that's pretty easy and optimized for SEO. The pricing model has to be different for you to actually make the margins. And one last comment on that is like, cause I bet like in the last 5-6 years, I went from the copier sales, right? Like literally door knocking to this whole online space by accident with the podcasting. And dude, I bought so much shit from like Ezra's Facebook marketing platform and Lewis House's webinar thing. And like this whole thing. And I'm like, I had thousands and thousands and thousands of dollars that I had spent. And I just finally was like, I'm in B2B and like, none of this shit's ever going to work for me. And like, and like, I didn't listen to myself. And instead I was like, going to these conferences thinking I could automate like my sales process. And I'm just like, this is just insane. So I don't even know if there's even a question there or if you've kind of experienced the same thing.
Yeah, no, that's what I'm experiencing right now between, these two different businesses is just the tactics. It's interesting, even between Wavve and Subtitle, which were very similar products. It's interesting how every business is so unique. And that's what I love about it is, it could be just the way your product is positioned or who uses your product could help determine how it's going to grow. So with like, for our example, when we're working with SaaS founders, it turns out they all talk to each other. They're all in these little community groups and they're on Twitter. And it turns out when we can build relationships with a few of them, they wind up sharing it in those other communities. So like, that's not something that I mean, I'm sure there's plenty of people out there that are suggesting that as a tactic, but it wasn't until we really dug into who our customers are, where do they spend their time, and how can we get our message in front of them, that then we kind of, I guess that's the concept, like going back to first principles, like listening to I think listening to other people, like you were saying, those, there's tons of gurus out there. And I think those are great for inspiration, but then you need to go back to your own independent thinking, switch back and forth. I think it's kind of a good strategy, or at least that's what I've tried to do.
Yeah. Amen, man. So going back to Wavve, so as you guys are growing and, again, you seem very intuitive with like how much fun you guys are having and what's going on in the marketplace. Where did, I'm assuming throughout the course you started paying your mortgage and you went, now what? So like, how did your mindset and like the goals change as you guys were growing?
The mindset really shifted. Well, I'll take you back to like the breakthrough of the business, because I think this is interesting. So we had been helping podcast creators. Our whole goal in the first year and a half of business was, how can we make it easier for podcasters to take clips and put them on social media? And we got pretty good at that. And we got that up to 10K MRR, and it was growing pretty well. And then we really started talking to our customers and like really trying to listen to them and spent a lot of time doing customer discovery. And what we found out that really changed everything for us is that podcasters didn't just want to share clips of their podcast on social media. They wanted it to look like nobody else. And they wanted it to fit their branding and pop and like look good on social media. And so we built this editor where people could change colors, move things around, kind of like Canva. And once we did that, people started really loving it, because once they could like put their logo on it and like change the animation to like fit around the logo, and then all these different things. When people,
I know exactly what you're talking about.
Yeah. And then when people started sharing that on social media, then they really started talking about it. They would really promote us because they wanted people to look at their video. So anyway, when that happened, that's when we started growing 15, 20% month over month. And we kind of feel like we had to unlock something and decided like, okay, it's time. I'm going to go work on this full time. My business partner was an engineer. He was still working on it part-time then. Part-time for him is like 30 hours to 40 hours a week anyway. But
did I catch in one of the interviews that your partner was or is an attorney?
Yep. Yeah. Former lawyer.
Okay.
He's a really interesting guy. He passed the bar, woke up the next day and said, I think I want to be a software developer. And
did he fund his own law school, or did he just drive his parents absolutely crazy with that decision?
So if any of you all are interested, have student debt or interested in student debt stories, his name's Nick Fogel. He had his own law school debt and he paid it off, and it's pretty impressive. He's got a great story about that. That's the whole process. That's
awesome, man.
Yeah, that was part of the journey.
Yeah, that doesn't make, again, what's more, mortgage or your student debt? Probably, probably the student debt in that case.
Yeah.
So, well, going back to the growth story of Wavve, and what I find interesting, Baird, is that, that's a lot of growth, 15% year, month over month. I mean, you compound that annually and you go, I mean, it's interesting that, so for example, software versus like, I got clients that are manufacturers or professional services, and like you literally sometimes can't scale that fast because you'll go bankrupt. You'll just run out of money. So how did you guys handle that growth? And, like, how did you guys start to shift as you're getting in full time, how did you guys accommodate for it? We
definitely spent a good portion. I can't remember exactly how many months, or maybe even close to a year, where we were hitting this growth, and we decided, okay, this company's starting to do well. We do want to work on this full time. Obviously, if we stopped and worked on it full time, then that's going to reduce what we can put back into the business. So we decided to set a target MRR and say, okay, until we hit this point, we're going to take every dollar that this company makes and we're going to reinvest it back. And that was the first time that we started hiring software developers. We hired a content marketer to start writing the blog posts. We hired a social media person, all contractors. And we started managing them in addition to some of the other stuff that we were doing. So we just reinvested constantly. And yeah, it's a great point. Like, services business can get up and going a lot faster. This was a much slower on-ramp, but then when you hit that point, you can scale, about as far as your churn will let you. And that was kind of the strategy that we took there. And I can't remember the exact dollar amount when we went full time on it, but it took a while.
But you got to a point where you said, okay, we've got to this point. Now we can start taking money out of the business and start rewarding ourselves a little bit.
Yep.
What, what I've gathered because of your creative desire, was there a point in the business infrastructure wise or customer wise where you're just like, this is not as fun as it was before?
Yeah. There was, that was last year. We got to a point. So it's actually an interesting story with Turnkey. So we spent a whole year working on churn because it was really what was keeping our valuation down and our ceiling as well, because we were just losing 12, 14% churn, which is insane. And we spent 8 months just doing nothing but analyzing churn and working on it, because what we found was that if we can reduce churn by 0.5 point, we could run the math and see how much it affected our growth rate and our growth ceiling. And that was, to be honest, was the moment, even though we did a pretty good job, it was when we find ourselves being extremely scientific like that. That's a pretty granular thing to say, like 0.5 percentage point makes a big difference in your MRR. We started realizing we're not scientists, and that's what we needed. We really needed an operator to come in that can be more analytical, product analytics, revenue analytics, all those things. The company just got to a size where we were doing very, very microscopic focused operations, which were very needed. But that was kind of the feeling where we're like, oh man, and honestly, it was part of that was we didn't want to do it, but also we just realizing the business, this is what the business needs. It's probably time for us to exit in the near future.
So super interesting, because that's obviously the triggering point then. What do you do next? What did you guys do next? Because I think when people get there, and that's the entire point of why I started this show 5 years ago, is no one usually, not, it's getting, more predominant that there's options, but where did you guys turn? How did you guys start to process that whole choice?
Well, so I guess our first thought was, okay, well, we can hire people to do this, which did sound appealing. But also at the same time, we were taking out this churn product that we had built, and we were realizing that we want to go build this into Turnkey and go sell it to other SaaS companies. So once we decided, okay, we know we're going to want to go work on Turnkey, managing employees on the Wavve side and doing that was going to be too much. So we decided that, okay, it's probably in the next year going to be time to sell the business. The first thing we did was go to a broker and kind of started to build a relationship and figuring out, okay, what's the market look like? Let's figure out our valuation, things like that. And then December of last year, we were actually going to sign with a broker in March, but in December, it was weird. Right before Christmas, we got 5 inbound emails from SaaS portfolio companies that, buy and grow SaaS portfolio companies. We just got 5 in a week and just decided hey, but we'll go with a broker in Q1, but let's spend a month just talking to these people and see what happens. And we really hit it off with Calm Capital, and we realized that who we were going to sell it to was really important. And they were also local, which was really interesting to us. So we just kind of went down that road and wound up selling it to them a couple months later.
That's awesome. And just easy peasy, right? Just a couple sentences, no challenges whatsoever along the way.
Yeah. Man, and they were amazing to work with. It was really interesting, actually, that all of our negotiations happened in Slack, which was this really nice async. It was kind of awesome that we put the contract in Slack, and then we would pull out clauses and put them in and start a thread and talk about them. And so even though it was this very, very diligent process, working with them was really great.
Oh, that is absolutely awesome, dude.
Yeah, it's a lot of work.
So, and I want to pull back the onion a little bit on this. Going back, Baird, what level of understanding did you have on valuations before you started talking to the brokers?
Not much. We had entertained an offer a year before, and so we knew that most buyers were looking at trailing 12 months with some type of multiple, but that was kind of it. We really just did a lot of, there's a lot of content out there that we started, researching and looking into, but before that, we didn't really know much.
So as you're talking to different brokers, and you don't have to name any names, but like, what was your observation of the different types of brokers out there, how their fees structured, and whether you felt good about them or you didn't feel good about them? Just what's your thoughts on it?
Yeah, we talked to a few. We liked them, and the fee structure, which was generally, I think 10% was about kind of the, of the sales
online space. Yeah.
Yeah. It seemed about industry standard. We really really, because it was our first acquisition sale, we were more interested in using a broker because we just didn't want to make any mistakes. And we found a few that and one especially that we really liked. And we liked the idea of taking it to actually taking it to the broader market and seeing what's coming back. The thing we didn't like was, and it's not their fault, it's just the time frame. I mean, it's 6 to 12 months working with a broker for the packaging, getting it out, going through everything. And with this direct deal with Calm Capital, we got it done in 3 with $7,000 in closing costs, which was amazing. We just hired a lawyer kind of in the last inning. So that was kind of the difference was, a broker would kind of package it up and, be more professional, I guess. But it's just going to take a lot longer. And we were ready to get cranking on turnkey. So we kind of went the other route.
Which makes sense. And just a couple of comments too, is like, because in the online space, you got brokers and there's not as many investment bankers. And I don't know if you're familiar with the difference are, but you're talking controlled auction securities, different capital structures, and very different than a broker typically. And especially like on an investment banker side, it's dealing with like net proceeds and the tax and the legal, they're quarterbacking a lot of this stuff versus kind of, the typical brokers. And there's really good brokers out there. It's just a different type of service. And so like, as I've, over the last 5 years, it's like, okay, like, because my dad and I didn't use an investment banker, and I wish we would have. But like, if you had the choice between a broker and you had some people sitting at this, right there, you can immediately save 10%. And I just I'm curious on your thoughts. So you say, we only spent $7,000. Do you think because a lot of people do that in even very large sales, Baird, where they're like, oh yeah, I'm just gonna, I got a buyer sitting here and it's a $25 million sale, and it's like, dude, you're gonna go, you're trying to save $500,000, but they're gonna get you $2 million more. I mean, did you kind of weigh the options, whether it was $7,000 that you're saving, or you're only going to spend $7,000? But did you feel like the price and the offers that were sitting there were kind of equivalent to what you would get out there, and you just were saving the percent?
Yeah, I mean, maybe this wasn't the right play, but we kind of picked 5 different portfolio companies. And kicked off due diligence, and we got offers from all 5 of them, and they all felt we really were. It was all pretty. I'd say they were all like 20%, within 20% of one another. But the big difference was, so we felt like we got a small gauge of the market. Now, I mean, a year later, now I would maybe think differently because there's so much liquidity out there that you may be able to really turn people. There's just so many people looking to place money that. Maybe now would be different, but this was way before COVID. So actually, no, this was just, I guess about the same time. But anyway,
it's just heating up. I mean, you go back 6 months. It's just, I'm seeing the same thing, by the way. Like, 6, 7 to 8 months ago, by the time this even gets launched, which will be 6 weeks from now, it's probably going to be even hotter. Yeah. But to your point, you saw the fact that like, hey, here's a rough gauge. And if you can save 10% of enterprise value by not going with a broker, I mean, that's money right in your guys' pocket.
Yeah. Yeah. And also it was a pretty simple business from a operations and legal structure. And we didn't have any debt, no employees, no liabilities. There's not really much tricky about it outside of just how we wanted to structure the deal with the buyer. So, I don't think we were planning on this, but we learned a ton, and it was, next time going through that, it's going to, we're going to be able to move a lot quicker.
Yeah. Well, and I, like I said, man, when I read your article on turnkey, I was like, they understood what you guys went through, man. Like, it was very well written, and you're talking about the TTM and normalized. Yeah, no, I was like, this is awesome. And you also were very, what I gathered, like, because you said you picked a SaaS portfolio company and not a private equity firm. And like, and again, like I mean, so we have an education business, and like, I want people to be that intentional and that articulate with what they want and the trade-offs. And most people don't know that they got to go through what's in front of them and don't know the difference. And so
Yeah.
what was your thoughts about Calm Capital versus private equity versus SaaS portfolio companies? What, like, how did you guys go through that decision-making process?
Well, we knew that we did not want this business pulled into parts in any way. Like, we didn't want anybody buying us, and we also didn't really want our product integrated into something else, or some type of roll-up situation. We really didn't want. I'm not even sure if this is usual. We kind of just assumed sometimes private equity might buy you and just kind of run the business forever and milk every little profit out without actually putting anything into it. So we knew that we definitely didn't want a buyer that was going to do that. We wanted somebody that understood SaaS companies. So that's why we kind of focused on these SaaS portfolio businesses. And we wanted somebody that was going to, we felt that there was still a lot of opportunity in the business. We just weren't the people. We were the 0 to 1 people. We wanted somebody to take it from 1 to 10. So we wanted somebody with more operational experience. That's what we were looking for. And as far as the deal goes with Calm, we structured the deal to where we keep some upside through performance payouts over the years. And we're still advising.
Out or what?
Just earn out. So
awesome.
Yeah, no equity. So that was something else that we felt like, it's like, we need to sell this business so we can move on, but we feel like there's a lot of potential still. So we wanted to hold on to some of that upside. Obviously that takes the initial purchase price down a little, or the lump sum down, but we were able to kind of find a nice balance, which was good.
Well, totally agree, man. And like, I don't know if you saw different terms between the 5 buyers, because like there's so many choices. Yeah, like there's so many choices that people have to make, and they don't really understand. Like, okay, so there's a dollar amount, but then there's the structure, and then there's what they're going to do with it, and like, hey, like, yeah, was it just, like, did you guys have any sort of like way of comparing the world of possibilities against each other?
Well, we knew we wanted the majority of it up front, because we needed to, we all have families and things that we want to do personally. So we wanted to make sure that we capitalized on that. Actually, the real reason we want to do that is take risk off the table, because we've been living on risk for 5 years straight. And then, so we wanted to be like 70% up, 80% up front, and then 20 with a smaller portion held out over time with the ability for upside. It's just the entrepreneurs in us, I guess, always wanting to gamble a little bit. And
how much did you have earmarked for personal versus plowing it back into turnkey, or like what was your risk appetite as far as what to do with the funds?
That is actually a really great question and a good point that, people, I think this is kind of maybe general to all business, that, it's all, sorry to put this clearly, I didn't know. And I hadn't thought about that.
I appreciate the honesty, man, because most people don't. Yeah, it's like,
yeah,
what are you doing then?
Yeah, it's like, looking back, I'm glad we sold it, and we needed to sell it. That's what the business needed. But looking back, it was like, I kind of sold without having a very good reason outside of working on turnkey. So then you get this lump sum in the door, and you're like, what do I do with all this cash? Like, I don't really have any specific place to deploy it. So I think that's
the top of the market, right?
Yeah, exactly. It's like, yeah, what a great time I'll just plow it all into Bitcoin. Let's see what happens.
NFTs and Bitcoin. Let's do it. Yeah.
I think that's something, if you're thinking about selling your business, I do think it's a good question to say, like, why, obviously we all want a good payday for when we sell the business, but then the question is, then what? What are you going to do? So I wish I had maybe a little bit of a better plan there. Because turnkey wasn't something that we needed to. We're trying to bootstrap it as well, so we're almost trying to artificially create some scarcity there, so that we kind of push it and build it the right way. So yeah, maybe next time. That's what I'll keep going back to. That. Next time, I'll know what to do. I'll know.
Well, I mean, like I said, man, that's the whole point of the show. Like, that's exactly why I started, because I went after we sold, and I was just like, we had to fire like 2/3 of our employees, and I went from running a $20 million company to then sitting in a cube next to an intern. I was like,
Yep.
well, this is not what I really anticipated. And it was just like, so it was just truly, I'll tell you a funny story, Baird. There was a guy, Sonny Vanderbeck. He's a fantastic dude. He raised 1.5 billion close to, for private equity with an indefinite hold period with conscious capitalism as the investment theme. Fantastic. And he was sitting there with this, he goes, yeah, one of my buddies is a private equity firm. And he goes, so he's listening to his friend tell a story going, yeah, we bought this company. We're screaming growth. We got an awesome management team. We're making a bunch of money and we're going to sell it. And then Sonny goes, well, what are you going to do with the money? He goes, we're going to find a company with an awesome management team and screaming growth. It's just like, oh, it's so funny. Yeah. But again, even private equity firms, man, people, it's just an interesting thing, right? Everybody's kind of chasing that thing. Is my partner calls it the proverbial dog that catches the car. Then you go, now what?
Yeah, exactly. Yeah, that's a really good point. Yeah, definitely similar experience for us. Yeah, I lost my train of thought there, but yeah, it's kind of a hard balance for us because as I was talking about in the first part of the show was I am like inherently this creator and I want to go create more things, but I need to make sure that, again, I'm doing it for the right reasons because I'm interested and curious, not that I'm like, just doing it just to build a big business. It's a great point. It's like, I just realized this like a couple of weeks ago as, again, trying to figure out investments and, where to put money. When you build a business that is appealing to acquirers, it's usually one of the best assets in the world. Like it's usually running really well. It's growing, it's sustainable, and like a growing, especially a SaaS business with good margins that's sustainable. Like there's no better asset, in my opinion. So it's like
100%.
kind of interesting.
Own it? Why not?
Yeah, exactly.
Own it?
Yeah, exactly.
And this is what's super interesting, man. And this is exactly like the epiphanies that I love seeing people go through our training with because they're going, like, because I've got like people, I'm like, you're making a couple $1 million in EBITDA. And like, well, I hate dealing with an insurance. I'm like, you could hire a $250,000 executive every 2 months.
Yep.
And then just like I said, I gave a presentation last week in front of EO and I said, who has an investment in Apple? Everybody pretty much raises their hand. I'm like, who works at the Genius Bar? I'm like, no one. I'm like, you don't have to work in the business. You have to build a good business. Are you familiar with Baird ESAPs at all? I just love talking about it. So check this out, man. If you build a company with sustainable, predictable, transferable cash, which is just a good company, and I'll send you a bunch, and the listeners hear me talk about this probably entirely too much, but you sell to your employees, but you have to have about, call it 15 to 20 employees and about a valuation of $5 million. So $1 million in EBITDA, 5 million, kind of the baseline numbers. You can sell your company and the ESAP trust buys the business, call it like a 5 times multiple. And then, so you get a third to a half of your money up front, the other third to half of your money with mezz financing rates, call it 10 to 12%, which by the way, name a place you can get that anywhere. And guess what? You can still run your company. You still get your salary. You still get to be able to deal with the strategic direction of it. And you get to vest back into the business along with your employees.
That's pretty cool. What's that stand for? The ESAP?
Employee Stock Ownership Plan. Program. It is, and also I've interviewed Jack Stack, and I've got an investment banker that I've interviewed. I'll send you I'll put the links in the show notes again to reference them back. But this is the whole point: is choices, and it's so interesting because you're so. What I find so intriguing is that you're such an intentional person and you're so aware of like what you like to do. And most people don't know you can have the money and build a good business and have the creative juices all at the same time. And ESAP's not right for everybody, but it's just like having these choices because like you said, you got cashed out. Now you're trying to figure out what to put your money into and have other businesses. It's like, man, you could there's so many options out there.
Yeah. Yeah. I try to remind myself on a regular basis that there's no rules. I spent a lot of my life thinking, going to school, hitting all the checkpoints because there were rules. It felt like I had to, appease all the rules that everybody was telling me I had to do. And then there's a moment early in entrepreneurship where things were actually working for the first time. Like, wait, there's no rules. We can we can design this however we want.
Isn't that the truth, man?
And it's just, it's such a, it's going to be hard if I ever have to go back. So I need to stay sustainable.
Right there, exactly. There was like a guy on my show years ago. He goes, and I steal his quote all the time. He goes, "I'm now as an entrepreneur, I'm professionally unemployable."
Yep. I was thinking about that the other day. Like, I don't know what job I could apply for. It's like, I don't even know what my skill set would fit now.
Yeah,
so
exactly.
I don't have a choice.
Man, this has absolutely been a blast, Baird. 2 questions as I wrap up. I love asking people what the word intentional means because the name of the show. For you, what does the word intentional mean?
Intentional. I think of what do you personally want? What is it that you want out of life? And I think see a lot of people that just don't really distill that down to figure out and write down. It's hard to get a bunch of things out of life. Like you can probably only get a couple. And I think one thing that was really helpful for me was to just, I've got a list of 4, maybe you can do 5. I don't know, but you can't do much more than that. There's just not enough time and not enough focus. So you need to decide and rank what is it that you want out of life? What are you going to be intentional about? Because that's where your time needs to go. And I think it's really easy to have those out of order, mixed up, and it's hard to, especially in entrepreneurship, it's hard to make progress when those are out of whack.
Wow, man, that was awesome. If people want to follow you, find your companies, what you're doing these days, what's the best place to find you?
Yeah, find me on Twitter and LinkedIn. It's at Baird Hall on Twitter, and then LinkedIn's the same. There's not many Baird Halls running around, so you should be able to find me pretty easy. And check out Turnkey. That's our new push. We're getting this off the ground and getting our first customers in the door. It's been really exciting. Any SaaS companies out there struggling with churn, we can definitely help.
Baird, this has been an absolute blast, man. Thanks so much for coming on the show.